The Federal Reserve today announced it is increasing interest rates by a half point. That is the biggest hike in 22 years.
It's all part of a plan to slow down inflation, which means that your borrowing costs are about to get higher. Mortgage rates, credit card interest, auto and student loans could all increase. While the labor market remains strong, the federal increase could slow down hiring and wage growth. And joining us now live to continue this conversation is Colin Watanabe, Branch Manager of National Securities Corporation. And Colin, thank you so much for joining us tonight. What are some of the ways that these higher interest rates could impact us?
Well, simply put, the Federal Reserve sets interest rate policy, and by raising the interest rates 50 basis points, about 0.5%, all borrowing costs are going to increase, particularly for credit cards and mortgage interest rates. So to give you an example, for a mortgage interest rate, if you were to borrow $750,000 at 5%, which was the going 30-year interest rate last month, right now it's 5.5%. That's going to mean $200 more in monthly payments to principal and interest. This is especially dangerous for people who have variable rate interests, which we can see going up quite a lot. We expect as many as 5 more interest rate hikes by the end of the year.
Yeah, besides home interest rates, auto interest rates as well. So if you're in the market for one of those items, what should you do right now? Do you just sit it out and wait till they come back down, or what?
I don't see interest rates moderating. I see them going up. So if you have a variable interest rate, I would probably consider trying to lock in a rate at the current rates. Historically, our rates are still very low. Some of us are old enough to remember mortgage interest rates in 1981 hit 18%. So right now, 5.5% is still historically pretty manageable.
And you mentioned auto and housing, but what other kinds of loans may be affected?
Particularly credit cards and consumer credit. We will see all those increasing quite steadily over the next year.
And it's not a huge impact, but I understand now savings rates will increase. That's a little bit too, if you're one of those savers.
Unfortunately, the amount that banks pay tend to lag the amount that banks charge.
So do you see rates continually going up over the summer? Do you see the Fed raising it even more?
Yes. The stock market had a very nice relief rally today, if anyone was paying attention. It was because Federal Reserve Chairman Powell indicated that there was very low likelihood of them raising interest rates 75 basis points. So only 50 basis points, only 0.5% was welcomed by the market. But inflation to anybody alive. We can see prices of everything going up. So I can see interest rates continually rising through the end of the year.
All right. Well, we really appreciate you stopping by here. Colin Watanabe with National Securities Corporation. Thank you so much for taking the time.
Thanks for having me. Have a great day.
Aloha.